What's up, YouTube? So, quick one. I know in Africa, most especially Nigeria here, a lot of us don't have enough capital to trade. So in this video, I want to show you how to trade a $10 account. Okay. I have done that in the past. I've done that. I think there is a series of how I grew $10 to $40, how I grew it to almost $200, $10, stuff like that. So I think I have them on my channel here. Maybe I will link it somewhere. But in this video, basically, I want to tell you everything that you need to know when you are trading a $10 account. So that is exactly what I want to show you in this video. First of all, let me start with this, because before I take you to the chart and start showing you anything, the most important the most important thing that you need to understand is that when you are trading with $10 account, don't use too much big lot size, because um, when you use big lot size that is too big, you are definitely going to lose the whole money. You are going to lose everything at once. Okay, and when you are trading $10 accounts, what you just have to do is that you have to be taking it small. If it is $2 profit that you see, you have to take it. If it is $5 profit you see, you take it. That way you grow it little by little, and you don't take two multiple trades. Like let's say, for example, you are using 0.01 lots, okay, micro lots, and when you take that, when you use 0.01 lots, you just want to take one single trade. You don't take multiple trades. You don't take like 2, 3, 4, 5. You don't do that, because if you do that, you will discover that if all this trade should go against you, all the money in your account will be gone. So you want to take it a single trade until you are able to grow that account to maybe $50. Then you can open 2 trades at once. You can open 3 traders at once. Okay, and again, the asset that you trade very matters. In fact, as a trader, I will tell you that if you want to trade a $10 account, stay away from forex pairs. Stay away from forex. Every forex pair, stay away from them. If at all you want to trade any forex pair, I will advise you consider only AUD USD, maybe Euro USD, anything GBP USD, GBP JPY, USD JPY. Every other currency are too volatile for that account. Okay, lead to, even if you use micro loss 0.01 loss size, before you know it, it could actually, a single trade, if you take a single trade, it can wipe that account. That is how volatile they are. Especially GBP USD and GBP JPY, those assets are, those forex pairs are very crazy, so you don't want to go near them. So if you have a $10 account, which pairs should you be consider? I will advise you should trade S&P 500. Okay, I will advise you to trade that indices for you to be profitable. Just trade S&P 500. If you are using SNES broker, S&P, the smallest lot size you can use for SNES is 0.03, so you can put it in 0.06 and trade S&P 500. So you can keep trading S&P 500 until that account becomes big. If you want to add any other asset to it, you may include Nasdaq. So those two, you can try and trade them for a while. Okay, but start with S&P 500. Don't trade gold. Don't go close to gold. Don't close to GBP JPY, GBP USD, and many of those currency pair. If you are trading S&P 500, maybe you can add AUD USD to it. But I'm not a fan of forex pairs, so I will completely advise you, based on my own understanding of the market, that I should stay away from that and focus on S&P 500. Trade only S&P 500 for the meantime. You may not get entry all the time, but just wait, be patient, and just keep taking it little by little like that. Okay, so those are the things that you need to understand. So I will take you to my computer screen and show you how to do your chart analysis, what to look out for before you take this trade. Okay, if you intend to take my mentorship class, check the link in my bio. You will see my Telegram and IG link there, so you can send me a DM. That way you can learn comprehensively everything, including psychology, how I don't get worried when I lose, and how I'm able to recoup my losses and stay calm and stay cool and stay happy and stay free. Okay, so you will learn all those things, and how I do my fundamental analysis. So let me take you to my computer screen. Don't forget to also like this video and subscribe to the video. So let's go to my computer screen real quick. Okay, so this is what you need to do. Okay, so when you come, you can use 4 hour. Okay, but don't forget that your amount, because you are trading $10, always open just one trade, one, like this. Open just one trade. So when you come to lower time frame, all you just have to wait for is retracement. You can see retracement here, like this kind of retracement. Okay, the retracement here, from here retracement, from here retracement. Now there's another retracement. So here retracement, if you look at it from here, okay, market move up, then retrace, market move up, market move, okay, it's from here, markets move up here, retrace. Okay, this one too is a retracement. As you can see, it drops down, so it's a retracement. So now what you want to wait for is retracement when the market moves up. Let's say now the market move up here. Let's say the market move up like this. So what you just want to wait for is a retracement like this to come. That retracement may come anywhere, but as soon as the retracement has happened, what you want to wait for is a double bottom like this. When you see that double bottom, take your entry, put your stop loss, just take your buy trade and put your stop loss below it. Let's say you enter here, okay? Just put your stop loss below that double bottom like this, okay? And then you can hold the trade for a long time, okay? This one, you can use this particular resistance as your first take profit. Use it as your first take profit. Put something like this here, okay? First take profit, but don't close. When the price get there, just look at what the price is going to do. If the price form, let's say the price got here and the price now form double top like this, just move this your take profit below the neckline like this, okay? Move your SL there. If it breaks, then take your profit. If it doesn't, continue, then continue to take the trade and hold the trade as long as you can, okay? So that is what I want to show you. And as a matter of fact, I want you to understand one thing here, okay? Just keep doing this. If you don't see opportunity, and again, use S&P. What's going on in S&P 500 is what you should use to decide what. Don't if you can't buy on S&P 500, don't buy on Nasdaq, don't buy on US 30. Use S&P 500 to judge other indices like Nasdaq, your Russell 2000, that is US 2000, your US 30. Use it. Don't, if you know that you don't have any good opportunity to buy or enter trade on S&P 500, don't do the same. Like now, as I'm talking to you now, I'm buying S&P 500 and I'm buying Nasdaq because it gives me, because I can enter S&P 500. Anything that makes me enter S&P 500, I will enter Nasdaq, I will enter US 30, and I will enter Russell. Okay, this is US 30. As you can see, this trade I'm in this trade now, and even US 2000. As you can see, I'm in all this trade together. The reason is because you can see your double bottom here. You can see your double bottom here too. Okay, this is your double bottom. You can see Nasdaq. It's not Nasdaq own is not really clean. Okay, but I will call it reverse head and shoulder pattern. S&P 500 too is not clean, but you can call it what's it called, double bottom, because if you come to daily, that is what you are going to see. That long rejection is going to be a week. Let me show you what I mean by that. Okay, you can see it's a double bottom. It retraces, come back, bounce off from here again. So that is the idea. So always look for that and you are good to go. Okay, so that is what I want to show you. I hope this video is helpful. If you have any question or you want me to talk more about something that you didn't understand, just let me know in the comment section. I will get to it. So see you in my next video.